Good morning, Top Step. Welcome to the market forecast. You guys seem to like the beginning of what was that movie with Robin Williams? I can't think of it right now, but good morning, Vietnam. Good morning, Top Step. Welcome to the market forecast. Wednesday, March the 10th. As always, I'm John Hoagland. Thanks for trusting me with your time. It is Wednesday. Wednesday is one of my favorite days of the week. I get to do the group coaching, and this week we also have market therapy. So I'm looking forward to a very busy day, spending a lot of time with you, our traders. As always, we like to look at the markets in context. Hopefully, you're bringing consistency in the way you're looking at markets. And it's going to help you bring some consistency out of the markets, and always thinking about the first thing when I think about a trade is the risk management. How am I going to manage this risk? Economic news this morning, 7:30. The CPI numbers came out. The core numbers came out lower than expected. The year-over-year CPI came out about the same. This is important inflation information. Inflation is, of course, on the mind of everybody in the industry. Everybody in the world really is, kind of holding on to this delicate balance we've got going between rates, inflation, the dollar value. All of this continues to keep traders and investors on edge a little bit, or a little bit cautionary. We've got rollover in our equities and in our currencies. Again, today we're trading the March contract. The volume is still far greater. That volume will probably transfer through the day tomorrow. Tomorrow morning, I'll check volumes, and I'll be probably still looking at the March contract to trade and move to the June contract on Friday. It's going to take tomorrow's session to really move most of that volume over. Now, it's not an exact science either. I could be wrong. We could have more volume in June tomorrow, and we'll discuss that. But you're fine trading either contract tomorrow. I would certainly be looking for everybody to roll over to the June contract, at least in our equities on Friday. Might be a little bit of a different timing for our currencies. As far as, the U.S. stocks today, they got a nice little boost after those CPI numbers. The House is expected to pass the COVID relief package today. It should land on the president's desk. We'll see how that goes throughout the day. There's always those possible headline risks. We don't know what's going to come out aside from, the known information. There's seeming to have a little bit of trouble here with the feed, but it looks good now. As far as known information, economic numbers, we know when to expect those. We don't know when to expect anything new. There's also the 9:30 EIA crude numbers today. We also have the 10-year note auction today at noon approximately. So we got to see how that auction goes, of course. And of course, all crude traders are on notice to be careful around that 9:30 EIA petroleum status report. As a matter of fact, they've been so off on those numbers. If you remember last week, they were looking for like a 1,000,000 barrel boost, and it was like huge, big boost. And the API did the same thing last night. They were looking for a smaller boost, 12.7 million barrel boost, according to the API last night. The EIA is looking for less than a 1,000,000 barrel boost today. Of course, we have no idea how that's going to come out. And even with this supply increase that seems to be kind of piling up here in the U.S., prices continue to kind of remain buoyant. There's a lot of expectation for increased demand as more people get the vaccine, more people are feeling healthier and feeling more confident getting out and doing things. So lots of forces in that crude oil market. We may probably have some interesting information coming soon with regards to people that are in that industry. I will look forward to that. The VIX down about 4% this morning, down at 2302 last time I checked. The dollar index up a little bit last time I checked, 91.99. The 10-year yield is down just a little bit here this morning, down around that 1.5 level, just above that level. So we're kind of getting set up for the trading day today, as always. Make sure you like, share, comment, question, feedback, and heckling. If you like what we're doing here, let everybody know. Throw a like up there. If there's something we can do better, let me know. I always say if there's something we're doing good, tell everybody. If there's something that we can do better, tell me. Okay? So the feedback, heckling, questions, comments, all of them, extremely important to us as we try and continually to improve what we do here. All right. So I'm going to say good morning to everyone. I've got a bunch of folks saying good morning. Ralph, first one in the room. You got to get up pretty early to beat Ralph in the room. You win the prize, Ralph. John, good to see you. Murph, oh, what a day yesterday. What a day today will be. Absolutely. Enjoy it. You know, that's so right, Murph. You know, we all do this because we have a passion for it. It's not just about the money, I think, for traders. It's about having the passion and having the gratitude to be able to do this on a day-to-day basis, even though it can be frustrating and aggravating and costly sometimes. But overall, it's a thing that we love to do, and if we love to do it, we have a much better chance of success. I love that attitude, Murph. Charles, Bill, Tanya, good morning. My brother Rick, good morning. Murph, Rick, you are now my second favorite Hoagland. Hey, in the words of the immortal Ricky Bobby, Rick, if you ain't first, you're last. Brian, good to see you. Richie, Bulldozer, good morning. Good day to, yes, be patient. As always, Charles, age before beauty, yes. Well, you were always the good-looking one, Rick. Murph, Will, good morning. James, Kevin, hey, joined Discord yesterday. Excellent. Good. We'll see you in there. Looking forward to really building that community. It's going to be something really good. And Dog Lacey is saying good morning to everybody as well. Laura, good to see you. Ashton, Rob T, good to see you. Level 2, good to see you. Magnum, Lamus, good to see you. Trading Research, Chris, Level 2, lovely POC trade off the CPI this morning. Good. Always, and I always like to start the day off on a good note, right? Jason, Patrick, Shady Trader, Hogue, GM, good morning. Can you talk about your cheap trades at the group coaching today? Absolutely, Shady Trader. I'm going to write that down. Cheap trades. Shady. All right. I got that written down. If I forget, remind me. It happens sometimes. Let's go stimulus. Okay, Rod. Oleg, good morning. Troy, Mike, the chef is in the room. Angelina, Richie, Brian, Mr. Shine's Mystery Channel. Endelson, good to see you. Trading a little late today. That's okay. Glad you're here. As always, Kevin, Jonathan, Joshua, Vasquez, Danny, Michael, Felix, Sharon, good morning. Trading Research for me. At first, it was about the money, and then it became about the challenge and the puzzle. Finally, it's about self-mastery. All excellent points, Trading Research. It always starts with the money, and then it's, wow, this is hard, and I'm going to try and figure out how to do this. And to do that, I'm going to have to learn a lot about myself. Excellent comment there, Trading Research. Hogue Dad. Level 2, my son. Dad, is the 9320 in play this morning? How to interpret important levels, point of control provided a perfect opportunity this morning break. Well, we'll take a look at that level 2. 3920 is not necessarily one of the levels that has been prime on my radar here, but we'll take a look at that when we get to the S&Ps. Caesar Bachnak, Lonnie, level 2. Great work on making a Discord level. Oh, excellent. Good. I'm older than you, bro. Keep you out of trouble. Yes. Well, you did pave the way, but relatively well. Rick and I were pretty good at not getting caught. It was my younger brother, Tom, that seemed to tip himself off a lot when he was up to no good. All right. I'm going to put in the link for Market therapy today. That's the link for market therapy. And now I'm going to put in the link for group coaching. That's at 1 o'clock today. Market therapy is at 3:15 Central. These are all in Central Time, of course. Market therapy after the close. We're going to be talking about what do you do when you go on tilt? What happens to us? How can we change our behavior in that regard? Dr. Menaker looking very much forward to being with us today, and we're looking forward to having him with us. All right, on that note, why don't we jump into the charts here and see what we're looking at this morning. As always, through a consistent lens, let's see what we've got. Looks like we've got the 30-minute up here for crude. We're going to go swiftly into the daily chart to see where we're at in bigger time frames. All right, so another surprise boost, and we continue to await information from the EIA. The information that comes from these numbers seems to sometimes have an opposite effect. If we have a big boost, we may rally. If we have a draw, we may break. It just doesn't seem to make sense, so I'm not going to be getting involved too early in this. I'm going to let the dust settle and see if I can find good opportunities at the extremes, if you will. We are coming into rollover now for the current front month here, April and crude. So we're going to start to see a little blurring of volume and open interest. No change in open interest yesterday in crude oil. I find that a little bit interesting. Finding some support at our weekly kickoff low level here, 63.80. At volume, kind of slowing. Maybe a little bit to be expected as we just kind of digest this new level up here. We're calling this a kind of an upside digestion market state. And again, no open interest change. I mean, less than 100 is on the preliminary sheet there. So not a whole lot of contracts changing hands, perhaps waiting for the EIA today and API last night. How about that? All right, so here's hang on a second. I'm going to be wrestling with these charts a little bit. So here's the 30-minute chart. Here's yesterday's range. Here's yesterday's value. Settlement 64.01. Value high 64.50, 64.55, let's call it. Value low 64.90. Kind of opening in the range, in value. Going to again suggest to try and stay patient today. Yesterday we left the opening range at the high of the session, even though we opened right in the middle of the range. The opening range trade has not been happening very often in crude oil and is probably more likely to occur the less it has happened in recent history. So just kind of looking at where we are today, probably not going to be too interested in anything that goes on here before EIA. Okay, let's take a look at the E-mini S&Ps, and that level 2 was looking at 39.20. All right, let's see what we're looking at first here. Okay, rollover is tomorrow into Friday. All right, we're aware of that. Volume overall is maintaining even through rollover. This is a optical illusion, right? Because the March contract is expiring, more volume is moving into the June contract. So you can't count on this. You got to count on the overall volume, especially during rollover. And the overall volume has largely been maintaining. Yesterday we had a 5,800 contract change in open interest. Again, that may be somewhat rollover related, but the fact that we broke out above this weekly kickoff high, 38.58, which has been both a blessing and a curse for the last 2 or 3 weeks. It's really been magnetic on some days and repulsive on other days. It's been the high or the low so often in regular trading hours. It just seems to just continue to be a bit of a thorn in the side of traders, or a nice boon or benefit. Last night, our overnight took a look down to that level, did not find what it was looking for. So, what am I looking at here? So that 38.58 is still a factor in the day time frame here. Now, what are we looking at? We saw the market kind of. One of the things I want to point out is when we look at the way the market has been treating the last three sessions, big up, off, big up, big fallback, big up day, big fallback. The market has been attempting to move higher, finding resistance, but seems to be continuing its resilient nature and continuing to push higher, even with the uncertainties that are out in the world right now. So in trading, what we see in short time frame, we've got a rally going on here. We've got a trend to the upside. We've got higher lows. We've got higher highs. The CPI came out and basically kind of took one of our opportunities away from us in regular trading hours this morning. So we're really kind of looking at where do we go from here? How does the market open? We're going to be opening probably in range and value. We've got quite a push to get above yesterday's range to create a gap, which would enter into gap rules. So the opportunities are already underway, I would say. I'm going to be watching the opening range. That opening range at 830 to 831 may give us an opportunity to recognize bigger, stronger traders in control of the market early on. That can happen all day long. So I'll be watching that opening range. There was really no overnight inventory with which to work with. I mean, this is where the market took off from after the CPI numbers. So no real overnight inventory. If you can call this overnight inventory, I would call it a little bit to the long side. The market is one time framing higher. I don't want to fight that without some sort of structure. We've got lots of things to look at above 60, 39.20, a recent high. I mean, it's doesn't stick out to me, but that's just me level two. I'm using just charts that I'm using for presentation here. I don't have my favorite charts available right now, but something I'll look at, and maybe we'll have a chance to talk about that later on. So, all right. So that's about what we've got to say here. I don't want to fight any directional moves, of course, without some sort of structure. Value high might provide some of that structure, but with the market kind of in a upward trend in short time frame here, I'm going to be cautious to try and push against this. I'm going to be probably, as long as we can hold this 38.58 level, looking for opportunities to buy any weaknesses that may occur today, barring any new news. All right. NASDAQ. Same but different. To roll again tomorrow into Friday. Open interest would indicate short covering from this low here yesterday. We lost 13,000, but again, there's rollover involved in that, so that may be a little bit blurry. Volume maintaining overall. We're really kind of in our equities continuing to look for and expect more range-bound, volatile ranges. We see here we had a volatile area of balance here. It looks like we're breaking out above the on the upside of that. Well, the NASDAQ has a lot more room to go to the upside. It's had a much bigger dip to the downside, down below 10% off the all-time high, where the S&Ps have had trouble holding below or even testing below the 5% correction level. So there's a lot more space here in the NASDAQ when it does finally move into some sort of direction. But in this whole area here, I'm kind of viewing as an area of balance or digestion, and it's again a very big, wide level of digestion that is creating some volatile opportunities and some bigger ranges, but it hasn't really gone anywhere. So I'm going to be cautious and look for opportunities as the day goes on. This is, again, same but different. looks like we're going to be opening with an upside opening gap here. So we've got new rules that are again a little bit different. We don't know if the S&Ps are going to open with that gap, but for early opportunities here, no overnight inventory until after the CPI. We're going to be opening above yesterday's range and value, and that puts us into, all right, if we can't close that gap relatively early, and I know that's a subjective term, but if we can't close this gap, there's only one thing for this market to do, and that's to range or move higher. Looking for opportunities to buy weakness in this market seems like a good idea at this time. Again, headline news can change anything. There's a big bill that's going to land on the president's desk today. What's going to happen there? Lots of suggestions and things to kind of think about and look at in the chat. We appreciate all of that. That's great. Join our Discord, and we can be chatting about this all day long. So back to the charts here. Let's take a look at the gold. All right. We had discussed over the past few sessions that we're starting to create a volume divergence. Volume was falling off on lower prices. That's not a healthy thing for an auction, is when the volume starts to dry up. We talked about yesterday, boy, it sure would be nice to have an opportunity at this weekly kickoff low. We never did get that, but we did see the market move higher on a bit of an uptick in volume. We lost 6,500 in open interest. There was a P-shaped profile yesterday, classic short covering. Lots of folks thinking, okay, I'm going to take some of these profits off. And it has me kind of intuitively thinking there may be a change coming in this market, just in the technicals, just in what we're seeing on the charts. I'm not an economist. I don't know what's going to happen, but just in what I'm seeing in the markets, I'm thinking it's about time to start thinking about possibly, maybe, looking to buy weaknesses in this market. Take a look now at the 30-minute chart. Okay, so yesterday we had our opening at the low of the regular trading hour session. Very long move up to an area of balance. This P-shaped profile backs up the idea that the open interest loss we had yesterday was short covering. Whether those shorts were in profit or whether they were stuck in the hole here is somewhat moot. It does take a little bit of buying power away from the marketplace. Okay, initiative buying is short covering, or when people believe that they have to pay a higher price because price is going to move to the upside, because it's going to move higher. The CPI came out. We had a pretty decent boost up through our overnight high, up through the high from yesterday. Are we going to reject price down at this level, or are we going to reaccept price in this level and range or turn the other direction? I'm going to try again and stay patient. We're in value right now. We're trading right at settlement, which, by the way, is 1716 even. 1716.90, I apologize. And that's where we are right now. So the urgency that we saw this morning on this move to the upside has waned. We're going to try and stay patient, and perhaps we'll have an opportunity to see if that theory works, to see if that hypothesis where we want to start looking for opportunities to buy weakness in the day time frame gives us a decent opportunity for profit. To the euro. Okay. Euro, saying kind of similar to what's going on in gold. We had a pretty decent move down to and testing weekly kickoff low yesterday. One big difference. We didn't really create a whole lot of volume, but again, remember, this is in rollover. We're probably going to be changing to the June contract here on Friday, and of course we'll be monitoring and talking about when to do that. But a decent look down here, but we added 13,000 in open interest off this low here. This wasn't necessarily short covering. This was what I expect at these weekly kickoff levels, was quite possibly longer, stronger buyers coming in and adjusting inventory near one of these important inflection levels, these weekly kickoff levels. So again, weekly kickoff supportive yesterday. No gap here this morning necessarily. If we kind of maintain inside yesterday's area of balance, it's going to create a little patience for me. Where are we now? Well, we have not done that. We have driven higher in the euro here after the CPI number. We did not have a gap, but now it seems as though the market is attempting to reject previous value and range from yesterday. We've got one time framing activity early in the session. The opening range was not necessarily the low of the regular trading hour session, but we didn't spend a lot of time down there. So if you're trading the euro and we've got a bigger move on the way, it's going to be a difficult trading day. Getting into to trends that are already underway for me has always been pretty much of a challenge. So we've got our challenges set up for us. If we're thinking we're going to be looking at short time frame levels with which to look for opportunities, there's plenty of them up here. We've got this naked point of control that we've already tested. We've just tested to value high. We've got a gap up here that's left yet to fill. We've got another point of control way up here. So there's a lot of visuals for traders to look at, and when traders are looking at a specific level, they tend to create the opportunity for price to move there. So be careful here in the euro. It's now it's now on the radar. The 10-year. All right, well, we've got 3 days basically in balance here. We've got this range, which was a bit of a doji, a little bit of indecision, and the market really hasn't moved very far from there as rates kind of hold are up around that 1.5% and in and around that area. The market really kind of waffling here. It is we lost 13,000 off the lows yesterday, again indicating quite possibly some short covering, whether they were short in the hole or short higher. We don't know, but the decrease in open interest on this move to the upside, a little bit lower volume. You're starting to see the divergence in volume over time here. The market is putting in lower volume at lower prices could indicate a change in the auction process. So, 30-minute chart. Okay, we are in range, and we are in value from yesterday's range and value area. We're right back at settlement, no overnight inventory with which to look at, with which to work for. To which to work off of, I should say, and we're right in the middle of the range. So I'm probably going to be focusing more on our overnight high and overnight low for opportunities as extremes than anything that I'm seeing in the middle here. Of course, I don't like trading in the middle. I don't like trading where it's very comfortable for traders to trade, and that's in value and near point of control. I'm much more into looking for opportunities at the extremes because at this extreme up here, the market may come up here and not find buyers, may run out of buyers or attract sellers, which would give me a cheap opportunity to look for a move in the opposite direction. And the same thing down here at the lows. I'm always focusing on the extremes in these markets instead of really trying to figure out anything kind of in the middle here. And that's why I kind of keep my charts on a 30-minute time frame. It lines up nicely with the market profiles, and it keeps me away from some of the noise that I think you kind of gets into a lot of traders' minds when you're looking at those shorter time frame charts. It's everybody's decision to look at the charts that they look at. That we've all learned things from different places in different ways. There's a million different ways to look at markets. All I ask is that you use a consistent lens. Look at the market through the same lens every day, and that might help you find that consistency we're all looking for. It's been very difficult for me to get through the market forecast here before the equity open. I know we've got a lot of comments here. I'm going to just kind of go ahead and end the forecast this morning so we can get down to business in our equities. Take your deep breath. Humble, grateful, and creative. See you for the group coaching session today. We'll see you for the market therapy session later on. And I know Dan will be looking forward to seeing you at the market recap. Get out there and profit today. Trade well. We'll see you later on. Have a great day. Happy Wednesday.